Hey, what's going on, guys? Today we're going to talk about Yieldmax ETFs, specifically ULTY. So we're going to take a look at the fund, what exactly the fund is, its total return year to date, and look at some of its top holdings as of this past week. So ULTY is an actively managed ETF that seeks to generate weekly income from a portfolio of covered call strategies, each on a U.S. listed security. So investing in the fund involves a high degree of risk due to ULTY's investment strategy. ULTY's indirect exposure to gains, if any, of the share price returns of the underlying security is capped, right? So they're going to be selling calls, they're going to be buying puts, so you are going to be capped. However, ULTY is subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by the income received by ULTY. So something they changed back in April, you are actually participating in direct share ownership. So Yieldmax is buying shares of these companies. So previously they used to create synthetic positions, synthetic longs, but you are actually long shares of these stocks. So just some fun information here. The symbol is obviously ULTY. The expense ratio is pretty high, but they're doing a lot of active trading and management there. That comes in at 1.4%. Looks like there might be a little bit of a waiver for a certain amount of time, so it drops to 1.3. Net assets, their assets under management is growing pretty significantly. It's even a little bit higher than this at this point. Currently trading for $5.76. There's a lot of shares, so you have to understand with these funds, there's a lot of share dilution because they're paying out distributions very, very often. So looking at the total return, so 10.47% year to date. This is inflation adjusted. This is not inflation adjusted, so it's about not quite 3% there, but those are the two differences. So inflation adjusted, supposedly inflation could be much higher than 2 or 3%, but it's 10.47% if you want to kind of negate that inflation there, or 13.25% before inflation taxes are kind of considered there. So not too bad year to date for ULTY. These are their top holdings. So as you can see on this sheet here, 6.48% is their top holding coming for their money market or cash equivalent position. The next one is ASTS, OKLO, IONQ, Rocket Lab, Affirm, Upstart, App, Hood, NBIS, Coin, RGTI, U, Reddit, SMR, and so forth there. So what these are, typically these are very high IV stocks that they can generate a lot of income from. And so forth there. So they have quite a lot of tickers here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. 23 individual tickers. I don't think there's any ETFs in here currently. They used to do some leverage ETFs and stuff like that, but I don't see those currently. So yeah, that's kind of a breakdown of their positions there. So then if we hop over to this spreadsheet, I just kind of wanted to touch base and kind of show you some of the synthetic positions that they have, within this fund. So Affirm, it's not weighted by, their largest positions. I think it's just alphabetical at this point, or sorted by the stock ticker. But Affirm, you can see they have direct share ownership, right? Direct share ownership of Affirm. So they have roughly, 2 million shares. I think that's 2 million shares of Affirm. They are selling good bit of covered calls, as you can see. So I'm not sure so the current price of Affirm is $79.49, and they're selling a lot of covered calls, right? So to the tune of, probably almost all of them. Yeah, that's probably all of them. So you have to remember, so what's the sum of this? 20,000, 750 call contracts or covered calls. So if you divide this by 100, it's probably going to equal that exact number of contracts. Yeah, it is. So yeah, so divided by 10, so actually that's 207,000. Yeah, so it's by 100, sorry. Yeah, because every call contract is, yeah. So they're leveraging out their entire position in covered calls. So they purchased, 2 million shares of a firm, and they're selling 13,000 covered calls at the 83 strike. So not much runway there. They're also selling 7,750 covered calls at 86. So those a little bit more of a runway there because you have roughly $7. And then also they're mapping these with, puts. So these are puts a little bit further out of the money to the downside. So this is called a caller option strategy. And it is when you sell a covered call and then you use part of the premium generated from that covered call to purchase a lower out of the money put. So pretty similar to a covered call, right? But you're also buying additional downside protection. So that just means your break even is just lowering a little bit and you're getting a little bit more of a downside protection. Hopefully that helps and kind of illustrates there. But yeah, they're doing this strategy, I guess, across the board. I don't see any other types of strategies. So they're selling calls and buying puts. Yeah, so actually it looks like AppLovin there. Yeah, it's just a little bit out of order. It looks like, I don't know what's up with the spreadsheet here, but that looks a little different. Maybe they're doing some type of synthetic 226,400. So no, those map 1736 to 1736. Those map, and then there's just some put here. I'm not sure. Oh, then that's them up there. Okay, so they have three collars, it looks like, going on. So the 420, 445, and then the 455. Yeah, so just a little bit different there. But yeah, across the board, though, it looks like they're kind of doing the same type of strategy, right? Doing the collar. They may do, some call spreads from time to time or put spreads. I think in their prospectus, they have that kind of, they have that wiggle room to kind of, implement different strategies when it makes sense to do so. But high level, they're doing kind of the same kind of idea across the board, buying shares and then selling collars. So the combination of calls and protective puts. So yeah, interesting fund. I don't really know of any other fund on the market that is doing something similar to ULTY. So, if it's something you're looking for, if you're looking for income, another cool thing about this fund, right, is they pay dividends every single week. So that's something unique about Yieldmax is they've kind of really innovated this space. Dividends used to only pay, once a year, then they were once a quarter, then monthly became very popular. And then, Yieldmax started implementing weekly paying funds. So so they've definitely innovated the space. Now you have so many different competitors in this space, Roundhill, Curve, and the list goes on of, it's going to get to a point where, the opportunities to get paid daily dividends, it is a very real thing. And it may already be in existence today. So if you, combine a couple different funds out there, you could essentially get a dividend payment every single day of the week. So we're living in a very interesting time. There's tons of opportunities out there. But yeah, this is just another fund in the marketplace. I've never really seen another fund, like I talked about, implement this type of collar strategy. They changed it back in April. The first couple years of the fund, they definitely got smacked around a little bit. So I'm glad to see they're trying to improve their fund and trying to improve their investors' money across the board. I feel like that's definitely something important that fund managers should try to do always, right? But yeah, that's a quick little overview of ULTY, a quick little update as of the recording of this video. I imagine these holdings are going to change quite often, so definitely go to their website. And if you go onto their page about ULTY, at the very bottom, there's an Excel spreadsheet link that you can download all of their holdings and kind of import it to either Google Sheets or Excel, however you kind of want to process that data. It's out there. So yeah, that's it. If you guys are still here, thanks for sticking around. Please like, subscribe, and stay tuned for more content coming your way. And as always, thanks for watching, guys. Cheers.